Bitcoin is under $60,000 today. That's a 52% drop from its all-time high of $126,000 set just 8 months ago in October 2025. If you're wondering what happened, why it happened, and where Bitcoin goes, from here, this video covers all of it. Let's get into it. Welcome back. Before we begin, you should know that this video is for educational purposes only and does not constitute financial advice. This channel covers financial markets and wealth-building strategies explained simply and clearly. If this video is useful to you, please like and subscribe to us. This helps us continue making videos. What actually happened? This crash was not caused by one event. It was caused by 4 separate pressures hitting the market at the same time. First, the Federal Reserve is not cutting rates. Inflation in the U.S. came in at 4.2% in May 2026, the highest reading since 2023. Because of this, the Federal Reserve has kept interest rates elevated at 3.5% to 3.75%. Higher interest rates make holding Bitcoin less attractive because investors can earn 4 to 5% on risk-free government bonds instead. When safe options pay well, risky assets like Bitcoin lose demand. Second, Bitcoin ETFs are bleeding money U.S. spot. Bitcoin ETFs recorded 13 consecutive days of net outflows, the longest streak since these products launched. During that period, over $4.4 billion was pulled out of Bitcoin ETFs. BlackRock's IBIT alone saw $527 million in outflows in a single day. ETFs need to hold real Bitcoin to back their shares when investors pull money out. Bitcoin gets sold. And third, geopolitical tensions. The U.S.-Iran conflict escalated in 2026, raising inflation fears and increasing demand for traditional safe havens like gold and U.S. Treasuries, and away from speculative assets like Bitcoin. These 3 factors together created what analysts call a liquidation cascade, forced selling that triggered more forced selling. Between June 4th and June 6th, over $3 billion in leveraged positions were forcibly closed in 48 hours. Where is Bitcoin now? As of today, June 25, 2026, Bitcoin opened at $60,983 and has since dropped further, trading around $59,400. The $60,000 level is a key psychological support zone. It has been tested multiple times since the crash began. So far, it has held, but the market remains under pressure. The Fear and Greed Index currently reads 17, which is extreme fear. For context, this same index was above 80 during the peak in October 2025. On-chain data shows several indicators that historically appear near market bottoms. The RSI on the daily chart has fallen below 30, which typically signals oversold conditions. The MVRVZ score, a metric that measures whether Bitcoin is overvalued or undervalued relative to its historical average, is sitting near 0.41, a level associated with previous cycle bottoms. Is this a bear market or a correction? This is the question everyone is asking. A 52% drop from an all-time high is significant by any standard. However, it's important to put this in historical context. Bitcoin dropped 84% from its 2017 peak. It dropped 77% from its 2021 peak. In both cases, it recovered and went on to reach new all-time highs. What makes this crash different from previous ones is who is selling. This is not retail panic leading the sell-off. It is institutional ETF redemptions, corporate rebalancing, and capital rotating into AI stocks. Retail panic follows. It doesn't lead. One important note, Strategy reversed course on June 9th and bought 1,550 Bitcoin at $65,332 per coin, confirming that the world's largest corporate Bitcoin holder still believes in the long-term thesis. The U.S. Strategic Bitcoin Reserve, established by the Trump administration, also remains intact. What to expect in the coming weeks? No one can predict the exact bottom. But here is what the data and historical patterns suggest. Most analyst cycle models place the probable cycle low somewhere around October 2026. If that holds, we are closer to the bottom than to the top of this correction. For December 2026, price forecasts from multiple analysts range between $74,000 and $92,000, significantly above current levels. The key factors to watch in the coming weeks are whether Bitcoin holds the $59,000 to $60,000 support level, whether Bitcoin ETF outflows reverse into inflows, and what the Federal Reserve signals about future interest rate decisions. If ETF inflows return and the Fed signals rate cuts later in 2026, Bitcoin has a strong historical case for recovery. Bitcoin has delivered extraordinary returns over its short history, but it remains a young asset, only 17 years old, and that makes it more volatile. If this analysis was useful, subscribe. And next week, we're covering another major financial topic you need to know about. Thanks for watching till the end.